And welcome back. Some interesting trends are occurring in our US housing market right now, given the fact that there's approximately 78% more houses listed for sale right now compared to 12 months ago. And on top of that, the number of reduced price listings is more than double compared to 1 year ago. So in today's video, I'm going to break down what we're seeing right now in the US housing market regarding price reductions, housing inventory, home prices, and of course, much, much more. And this will give us some indication of what lies ahead with our US housing market. So I have a lot to share in today's video, but of course, before that, check out that link below if you guys want a real estate agent referral, or go to homeandmoney.com/Jason to get started today. And with that said, let's begin today's video. So the information I'm sharing in today's video is based on data from Realtor.com. They post a weekly housing market update, which like my previous videos, I didn't even read. Instead, go to Realtor.com/research/data. They actually just changed their website here. But go to weekly inventory and then click on this link right here, which takes you to more or less this right here. I kind of color coded it, add some comments to provide some analysis about what's happening right now. So let's talk about asking prices, housing inventory, which of course is active listing count, new listings, days in the market, as well as the number of price reductions and also the share of price reductions as well. I'm also going to be sharing how this last week, which is the week ended February 4th, compares to years past going back to 2018. And again, Realtor.com only provides weekly data going back to July of 2017. So I only can share data going back to 2018, which of course is good because that's pre-COVID levels though, right? So also going to be sharing some insights and kind of some predictions as well towards the end of this video. So let's first talk about what happened last week for the week ended February 4th. And let's get nerdy. So asking prices increased by 7.7%. So this is interesting because asking prices in the US have only been increasing by single digits now for 9 consecutive weeks. This is so much different compared to 2022, where every single week in 2022, we saw double-digit increases of asking prices in the US. But now for the past 9 consecutive weeks, we actually been seeing single-digit increases compared to the same time frame 1 year ago. What's also interesting as well regarding this is that back in 2022, there was only 4 weeks we saw single-digit increases in home prices, and that was for the last 4 weeks of 2022. And fast forward to this year, every single week this year, we've been seeing asking price gains of less than 10% on a year-over-year basis. Let's also talk about housing inventory, or the number of houses for sale in the US, because last week that increased by 70.3% compared to the same week of 2022. This is actually below the gains that AltosResearch.com is reporting as well, because Altos is reporting gains for inventory up by 78% over the last 12 months. So Realtor.com is reporting a gain of 70.3%. more or less in line with what AltosResearch.com is reporting. And by the way, this 70.3% increase of housing inventory, according to Realtor.com, is actually very, very close to the biggest year-over-year gain we've been seeing over the past 12 months. In fact, last week was actually the biggest gain we saw over the past 12 months, a gain of 70.8%. Here's another trend we're seeing regarding housing inventory, because inventory has been increasing in 18 out of the last 21 weeks, despite this fact we've been seeing fewer new listings for the past 31 weeks in a row. Therefore, it appears these gains of housing inventory really is due to a pullback in home buying demand and not due to a giant increase of new listings, at least compared to 1 year ago. So in regards to that, new listings decreased by 10.5% last week. This is actually the first double-digit decrease since late December last year. Because before that, we actually saw, 4 consecutive weeks where we saw single-digit decreases of new listings. Also, like I mentioned, we've been seeing fewer new listings compared to the same time frame in 2022 for 31 consecutive weeks. Fewer new listings hitting the market compared to 2022 for 31 consecutive weeks. And despite this, housing inventory has been growing ever since mid-May of 2022. Let's also talk about how fast or how slow houses are selling in the US, because last week it took approximately 19 days longer to sell a house compared to the same time frame of 2022. Therefore, it's taking nearly 3 weeks longer to sell a house compared to 12 months ago. Again, though, this is based on closed home sales. Therefore, this is a lagging indication or a lagging indicator of our housing market. One more thing you guys should be aware of, though, is this 19-day increase compared to 12 months ago is actually the biggest increase in at least the last 12 months. And speaking of the biggest increase in the last 12 months, have a look at this. The number of reduced price listings surged last week, an increase of 170%, the biggest increase in at least the last 12 months. On top of that, we've been seeing triple-digit increases in the number of reduced price listings in 12 out of the last 14 weeks. One thing you guys should be aware of, though, is that even though we've been seeing a lot more reduced price listings compared to 12 months ago, is that the share of reduced price listings has actually been decreasing. So take a look at this. According to data from altosresearch.com, for the week ended February 10th of this year, the share of price drops is only 32%. The share of price drops only 32%. 3 months ago, for the week ended November 11th last year, the share of price reductions was 43%. This means the share of price reductions has decreased by 11 percentage points over the last 3 months. So the share of price drops at 32%. This is actually the lowest levels since July 8th of last year. But still, when you compare this last week compared to years past in 2022 and 2021, we're still at very much elevated levels, but still going down ever since more or less mid-November last year. So let me actually share the trends we're seeing right now according to altosresearch.com. The share of price reductions right now, again at 32%, the lowest level since approximately July 8th of last year, when also the share of price drops was also 32%. But at 32% right now, this is well above 12 months ago when the share was only 18%. And also 2 years ago, the share was about 19%. And during pre-COVID, just before COVID, back in February 21st of 2020, the share was 25%. So right now the share at 32% is more or less a 3-year high during that same time frame. But of course, having said that, it has been decreasing really ever since mid-November last year. Okay, changing gears slightly here, let's talk about how last week compares to years past going back to 2018. Also in 2022 and 2021, our housing market was in full swing. As you can see right here, huge gains by double digits for asking prices, huge decreases of housing inventory, and also new listings decreasing as well. And of course, houses selling faster compared to the previous year. Back in February 2022 compared to 2021, houses were selling about 12 days faster. In 2021, selling about 17 days faster compared to 2020. Whereas this year, it's taken about 19 days longer to sell a house compared to February 2022. And obviously over the past few years, we've been seeing decreases in the number of reduced price listings, whereas in 2019 compared to 2018, we actually saw a small increase by 8.6% and now this giant increase of 170%. Another big difference here is this 6.4% increase of housing inventory back in 2019 compared to 2018, whereas this year a giant increase of 70.3% in the number of houses for sale. All right, I know there's a lot to go over in today's video. So I actually want to provide a summary for you guys and also kind of some predictions and some insights regarding what lies ahead or potentially what lies ahead. So number one, housing inventory has been rising year over year for 18 of the last 21 weeks, and it rose by 70% last week, according to Realtor.com. Of course, when looking at Altos, it rose by 78%. This growth rate is very much significant given the fact there has been fewer new listings compared to last year for 31 consecutive weeks. However, the number of houses for sale has been on a downward trend ever since November last year. We're currently at the lowest levels since late June last year. Also, the gap between last year and this year for new listings has been shrinking because it has declined by single digits in 4 out of the last 5 weeks. In other words, new listings more or less have been decreasing by double digits from October through the end of November last year. And number two, mortgage rates in general have been on a downward trend this year until we hit February, because rates have risen from 5.99% as of February 2nd of this year to 6.6% as of February 14th. In other words, rates have risen approximately 60 basis points over the last 2 weeks alone. And number three, we saw a huge increase in the number of reduced price listings over the past few months compared to 1 year ago, of course. We also saw triple-digit year-over-year gains in 12 out of the last 14 weeks. However, though, the share of price reductions has been on a downward trend ever since mid-November last year. And number four, houses are taking longer to sell compared to the same week 1 year ago for 28 consecutive weeks. Again, though, this is a lagging indicator based on closed home sales. So what are some potential huge changes ahead, given the fact that mortgage rates have been more or less above 6% ever since October 1st last year? Number one, average rates are around 2.5 percentage points higher right now compared to 12 months ago. This causes a 25% decrease in buyers' purchasing power. And number two, housing affordability is still a big issue. It was improving, past tense, it was improving as prices and rates were decreasing. But like I mentioned, rates have increased approximately 60 basis points over the past 2 weeks alone. But home buyers looking to buy a house today would save approximately $200 per month compared to the beginning of November last year due to the dip in rates from 7.3% down to 6.6% as of February 14th this year. And number three, the National Association of Realtors reported a 2.5% rise in pending home sales for December. This could translate to more closed home sales in the next 1 to 2 months. That would be closed home sales in January and February this year. But in my personal opinion, home sales should remain very much subdued compared to 2021 and of course compared to 2022. So we're kind of seeing this seasonality of our housing market where we see more activity amongst home buyers, but it's not going to look anything like 2021 or the first half of 2022, given the fact that rates back then were around 3%. Now rates have been more or less above 6% ever since October 1st last year. Also, we need more housing market data in order to gauge where our housing market is headed, especially during the spring home buying season. And number four, to combat inflation, the Fed raised rates by 25 basis points on February 1st this year. This, of course, increases interest rates for HELOCs or home equity line of credits, credit cards, and new auto loans. But of course, saving rates also increase as well. So for example, you can get an online savings account with an interest rate above 3% right now. We're also starting to see inflation start to cool down, but not by very much. Inflation is remaining very sticky, to say the least. Rate hikes are expected to be smaller this year. The street is expecting 2 consecutive 25 basis point rate hikes in March and May this year. In comparison, the Fed raised rates by 75 basis points 4 times in 2022. And of course, how much the Fed decides to raise rates further this year depends on incoming data, especially regarding inflation numbers. Therefore, of course, a lot could change, right? Number 5, rates were above 7%. I talk about rates, mortgage rates were above 7% for the vast majority of October last year. And we saw the true effects of regarding these high rates in November and December's stats. We saw huge declines in home sales, huge decreases in pending home sales, and of course, home prices decreased by about 11% ever since May and June of last year. The big question for me though is how will home buyers react to the fact that rates have gone from 5.99% as of February 2nd, now they're at 6.6%. Of course, time will tell, and I'll definitely keep you posted. And number 6, we're starting to see some early signs that home buying demand is increasing. So for example, mortgage purchase applications, according to the MBA, have been on the rise in 3 out of the past 4 weeks. We're still down by about 37% on a year-over-year basis though. What we also saw in November and December last year, according to the US Census Bureau, is a small increase in the number of new home sales in the US. And of course, a new home sale is defined as when a home builder accepts an offer from a home buyer. This is really an early indication of home buying demand. Additionally, pending home sales in the US for existing houses have started to increase, but we're still well below last year's levels. Again, though, this is very early signs and we need more housing market data. And number 7, subscribe for free. And these videos, especially this one, take me hours to make. So I definitely appreciate you guys for watching this video. And I appreciate you guys in general for supporting my channel. Hope you guys have an awesome day and I look forward to seeing you on the next video.